Good morning, everyone. Welcome to TopstepTV, the London session. We're going to be looking at what we have for this week. But before we start, if you're here for the first time, my name is Deeyana Angelo. I've been trading for about 17 years, and 12 years out of that, I've been trading futures, mainly for various prop firms, specializing in crude oil, but also gold, and then occasionally dipping into equities. However, my main products are crude oil, precious metals, and generally the energies markets. I don't know whether you watched my review for the weekly outlook on crude oil last night on my own channel, but I'm going to run through that really quickly on Topstep's platform. So when I look at the very, very large weekly chart to see what we've got, you'll see that we have 2 points of high volume nodes, which basically represents the same thing that we can see on supply and demand. Let me just go full screen. Apparently my audio is a bit low. I do apologize. I'm going to try and bump that up. I am fighting a cold, so I do have a sore throat. So hopefully this is a little better. Maybe put this a little bit closer to my face. How's the audio for everyone? Is it low still? Is this better? Hopefully it's a bit better. I am a bit croaky though, so again, bear with me. Okay, so let's carry on. So if you look at the volume profile, let me just go to actually the full contract, because then you won't see the position, and then we're going to go back to my micro position. But yeah, so we have a couple of points of high volume nodes, right? We tested one just at sort of 74 evens area. And that's where we're trying to bounce. So if I look at some options levels from last week, they kept moving it up, right? First of all, we had some calls up at 75. Then throughout the week, they moved it up to 78. Well, now that's actually moved to 80. And looking at where they are today, they still have calls around 80. So that means that the market participants could be bullish. That's like, usually a pretty good sign. Now, we did have news from the Middle East. We had, the hurricane. Obviously, all of that might be a big, big risk event. Whether that continues this week remains to be seen. Obviously, we do have a couple of difficulties for this week, which is the rollover in crude oil, which happens every single month. And I know that for equities traders, everybody freaks out whenever equities are rolling over because they don't roll that often. But crude oil, this is something that we deal with every single week. So what that can mean is lackluster movement, lack of follow through, just generally not really getting huge movement. But again, on the other side, we do have the monthly option expiries that will happen this Friday. So right about the same time, we're going to have crude rolling over to the new month and the monthly option expiry. And then to aid in potentially some sort of liquidity on crude oil, we have the new bi-weekly options that started trading in July 23rd, and they happen on Tuesdays and Thursdays. Typically, that means that Tuesdays and Thursdays may lend themselves better to some more trending type days. So if you see like a sustained auction and, maybe a move against that, maybe try using that as a pullback to go with a directional move rather than fighting it. But generally on the big time frame, I do see 74 evens as a potential area, which I did call out in my weekly plan as well. I had 75, but then we opened with a gap, invalidating the 75 area, and then the next point of contact was 74, and that's what we're sort of floating around right now. I'm going to go back to the micro chart now and start dropping down through the time frames. So looking at the daily chart, we have a consolidation. Here's the consolidation. The consolidation has a bullish engulfing inside it, And the sell-off that we saw previously, which happened on 8th of October, didn't really give us much follow-through. So that break to the downside, a bit sketchy. And that's why I'm thinking there's probably some more upside to be had, at least inside this range that we've now established. And interestingly, this is now a pretty visible high and visible low that we can use. So let's do a couple of lines there. And I want to draw your attention to exactly where they're doing this, because it's very interesting. So let's put a white line there and a white line on the low. So look at the prices. You know how I always bang on about crude oil liking round numbers? Well, look at this. It's 78.50 or 49 if we're going to nitpick, and 71.55. Those are round numbers. So if you take the observation that crude oil likes to move within a sort of quarter cent increments, so you have 0.25, 0.50 evens, 0.25, 0.50 evens. Try not to get involved around weird prices, right? So 0.50s and evens will always be areas of interest for the hedgers. You know, they're generally not going to go into like weird prices. So anytime you have a round number, there is a pretty decent chance that if you've looked for a confluence from something else, that you may see some reaction there. And that's why I try not to get involved around 0.72s or 83s or, 17s, 13s. I will always wait for those round numbers to be touched at the very least, and then look for the trade that I'm looking for. If I can't get it, or if I see a failed auction away from that, I will actually increase my stop loss to incorporate the round number, and then maybe add on to that if we do manage to touch it later on. So that will be one systematic way of how I would enter and scale into a position. Right now, I just have a very very sort of big stop loss, because I am bullish on crude oil because of all the stuff that I've seen happening with the options and still having that 80 call area. But there is a very good chance that we rotate all the way through to 71.50 this week. Whether that's going to happen today, probably not. We have a half day today. It's Columbus Day over across the pond. So we'll see how that plays out. Now, on the day time frame, if I just reference some of my other levels and algorithmic areas, I do have the open just below London value, and that's within reach. So I would say a gap fill would be on the cards today. That would speak to that bullish sentiment in the round number that I'm thinking of. And obviously we turned away just shy of 74, so that's why I have a pretty wide stop loss, just in case that we start to dip down to 74s. It kind of gives me a chance to actually get involved and have a very nice scale in up to 4 micros, so that it averages my price a little bit better, and thereby reduces my stop loss and brings me up to the full max default size that I'm aiming for right now. All right, so Stefan M wants to know, do you also see a long chance at 74.70 in CL? 74.70 definitely. I would say much higher than that. So we have the London value low at the round number of 75, so 74.99. But I definitely see a gap fill on the cards today, because we only opened about 0.7%, just under that, below value. And whenever that happens, it actually has a pretty high chance of reaching the value area first on either side, whatever happens. So that's the first setup. Gap fill up to the London value at 75. I do see that we tried to extend the initial balance a little bit, but then we had a typical London non-committal follow through. The initial balance, I'm going to mark on this chart if I can actually get my brain to work. Rectangle, okay, that's what we need. So these two red candles or black candles on my chart here, they were the initial balance. So if you see this this white candle that went outside of it and then closed inside it, and some people will be like, oh, dude, that's a failed auction. Yes, that's a failed auction, but first of all, this is an out of hours market for this particular product. And second of all, initial balance size is only 46 ticks. That doesn't lend itself well to any failed auctions because your profit margin is not there. The profit margin for a failed auction is ballpark the other side of the initial balance. So it would be at most statistically 74.11, so where the London session low is located at the moment. And that's why I'm taking the context of what's happening on larger time frames and taking the gap down open to hypothesize that at this time of the day, failed auction on a very low IB is not going to be something that I want to do at this time. So my trade location is not there. My trade location is actually closest to the 74 area and that bullish engulfing that we have on the daily chart, right? So, and again, Hogue always says something that doesn't happen is equally as important as what does happen. And right now, we failed to reach the demand area of 73.86, if I'm going to really nitpick, because that's where the demand is. That will be an entire demand. So the edge of that demand is sub 74. We haven't even touched 74s yet, right? If we do, like I said, I've got enough room to scale in. But if I don't scale in, this is going to be one of those slow grinder trades that I might keep for about 4 hours. Partially also because it is a half day. We're probably going to have a lot of people not trading today. And the volume is likely going to be very, very low. Now, on crude oil, just like in equities, low volume areas can bring these zombie rallies. So we'll see whether that happens. For now, it's looking decent. Like they are actually trying to push again above the initial balance high. And so far, this hypothesis of bullish crude oil, at least for today, should play out. At the very least, it is in profit, right? But yeah, notice that I am using a 70 tick stop loss, and that means I have a lot of room in case it starts to go down to my actual 74 evens level to a reduced stop loss size and be add-on without adding any extra risk to my position. Scaling into positions, guys, should not be done willy-nilly. I see a lot of people going, oh, my normal position size is one lot, and now I'm going to add into it while the trade has gone against me on the same stop loss size, using another full one lot, and then increasing my default position size by 100%. Is that risk management? I would argue not. I would argue that's gambling. But having an idea of what you want to do, starting slow with a half position size, increase stop, then if it goes down, you can maybe consider adding, and that would improve your average price without compromising a level that you're looking at and without compromising a stop loss placement, right? So that's what we want to aim for. We want to aim for quality decisions around areas of interest. But if you're in with, like, let's say my max default size is 4 lots, right? If I went into 4 lots and used a 35 tick stop, which I normally do, that would mean I'm at risk of that 74 evens getting reached. And then what do I have? I have a losing trade on a full position. You know, is this a better way for me? Absolutely. You control risk better. You control your positioning better. You have a systematic way of venturing. And then maybe if it, like let's say you're aiming for, let's make it easy, 6 default size, and you want to add in 3 times. I would always add once when the market dips against me, if it does, and then another time when it turns around and starts going my way. But again, you're working with a max default size of 6, not 1, right? So if you're only in with like a 1 lot, that doesn't give you much room to maneuver, and it doesn't do anything for risk management, right? Because you can't partial, you can't add on, you can't. No, nobody is that accurate all the time. So having these, if you are going to trade with size, having these areas where you might want to scale in, Dolby style. I actually quite like the way he does it. If you were trading with size, that's how you would do it. You wouldn't just plow in with your max lot size. You would try one, dips a little bit against you, you add in or within a zone that you're looking at. And you guys know I always look at about a 30 to 50 tick zone. It's never like a singular price point. I always say that. So that would be a better way of doing it. So therefore, starting with a slightly larger stop loss but a half position size, especially if you're not entirely sure whether the price is going to dip down further or it's actually already at the level, this is actually a very good way to still have something in the market, even if it goes up. So I am bullish on crude oil. We didn't touch that demand area. It might go, right? It does that. It can sometimes move away from the levels, right? Anything can happen. But in the most ideal situation, I would like to see it back down to 74 evens and then to move. But this way, at least I've got something in, right? So that's the whole point. Great Filibuster says CL is absolutely untradeable on any time frame underneath 30 minutes. I would disagree with that statement. If you know what you're looking for, like for example, let's say you have a neutral day. So we extended already to one side of the initial balance like we did here, and then we extend lower. I don't need a 30-minute chart to run a neutral day fade. In fact, all I need is Bookmap, just to see where the orders are and just to see whether people are plowing in with bigger orders, right? That's all I would need. So I disagree that it's untradeable. I think it's very tradable in a given situation. But are you going to stare at like a 1-minute chart and do a directional trade in crude oil? No, it's going to rip your face off because that's what it does. Crude oil is a very double-sided instrument that likes to do whipsaws intraday. And it will, on most days, have one violent move to one side and then a pretty bloody violent move to the other side as well. And if you don't know when to look out for those, yeah, it's going to look like it's a nightmare product. The worst thing for me for crude oil is when it's not moving. Okay, that's the most frustrating thing of all. It's like when it's moving, I'm fine with it. I just want it to move. I can deal with that. But when it's not moving and when it kind of does one move and then dies a death, like Forex, that's a problem. Okay. Let's have a look. Range trading hours C on 1 minute. Again, 1 minute, if I'm going to use such a low time frame, I'm going to use Bookmap over 1 minute because I think I can get more information on Bookmap. What do you mean half day across the pond? It means it's Columbus Day today and the markets will be closing early. It's a US bank holiday today, in case you didn't know. So let me just check what times. What am I looking for? CME Columbus Day. Yeah, so I'm just looking at the CME trading schedule. Where is it? It's not here. Okay, hold on. Columbus Day, market hours. Let's see if that's going to bring me. Is it a short day? Let's see. I mean, usually it's like half day, so let's see. So some markets will be closed. but some of them are trading. Now let's see if crude oil is going to settle at normal time or not. Right, so all interest rate and foreign products are usually, I mean, if we're going to have a half day, then that's going to close usually at 12 p.m. Central. But I don't know, sometimes it changes. So let's see. I'm still not fully awake, guys. So let's see. Market hours. What? Okay, so bond markets are closed. But the futures, it looks like most of them will settle at their normal times, but bond markets are not trading today. Yeah. Yes, Greg says, isn't the calendar? Yeah, probably. I haven't really used the full features of Topstep yet. Where is that calendar? Let's look at it. Yeah, so futures, I think most of them will be open for the entirety of the day. But how many people are going to be trading it? That's another thing. Because it's a minor holiday, but it's still a holiday day. So I'm always a little bit careful. Now, where is that calendar? I never know. Somewhere on the left. Anyways, never mind. Too early for that to learn new things. Yeah, so they are open as usual, but again, because bond markets are not trading, so you're not going to have volume from bond traders. Again, it's going to be a little bit of an oddity. And then, if we had, in particular for CL, it's a rollover week as well. So that always brings in weirdness. So we'll see. So CME doesn't have a bank holiday. That's what Dakota said on Slow Markets. Yeah, so only bonds closed, yes. Vintner and Mason says, Dee, do you have a decent DAX strategy? Yes, it's one of my main products for London. Sadly, we don't have it on Topstep. I have been trying to get it into Topstep for a good part of the last 8 months. Initially, MP said that they were going to bring it. So in March, he said we're going to be bringing it within 60 days. Didn't happen. And then now we are looking at the end of the year because then they moved it to the end of September. And then I looked it up again. And unfortunately, it is just not coming this year by the looks of it. If you want to push that forward, if you want to push the DAX products coming to Topstep forward, you need to do some heavy lifting. So I did post on my Twitter. The direct link to the Eurex post. So I'm going to plop that into the chat. If you go to the link that I just posted, and if you want DAX and Topstep, go on that page. You will have to log into like Google or somewhere, and then you can upvote that post. If we manage to get it up to about 500 votes, they will have to push it up to get it over to us. I tried, guys. I really tried, but they're just like, not really that keen on European markets. I don't know why. That's a bit of a mystery, but hey ho. You would think that if we are running London, we need London-specific products. And, we are the biggest company, in the space. We've been here for the longest time as well. So pioneers in the space. Why don't we have European products? So we need to have them for our Australian friends, for our, Asian friends, and for our European friends as well over in London, right? But yes, I do trade DAX quite a bit. DAX, I like to look at how VIX is doing, so how DAX-specific VIX is doing before I do anything. So that's step one, because if DAX VIX is low, then it's a bit sketchy. So I'm gonna have a look here. Now, whenever DAX is under 17, that's not really that great. It's better to have it over over 17 and not get involved in like moves that are slower. If the moves are slower, then I kind of shy away from doing any breakout trading, because usually that means that it's not going to be that lucrative. But generally, the levels that I use on DAX are exactly the same that I use on other markets, because my way of trading involves supply, demand, order flow, and just looking at distribution curves, aka value areas, and how the auction is doing. So there's nothing too much different there. Right now we're opening with a gap. And let me just have a look at DAX, larger time frames. I am running a lot of things here, so it takes a little bit of time to load up. Yeah, so it's in a high volume node at the moment. If we can get down to the London value around 193.75 on the December contract in mini DAX, I would be interested in some longs around there. Probably won't chase a short because it's a breakout, so VIX is not quite high enough for that. I mean, it might happen. Look, anything could happen, but my probabilities for DAX say that it actually loves to do their long nonsense equities bias. So they're very resilient, right? All of the equities that I'm looking at, very resilient, and we're at all-time highs. So, you know, shorting against that, it might be good as a scalp, but I certainly wouldn't be looking for any bigger moves. So a failed auction long could be a possibility. There's a nice little Asia high down at 19469. And at the very least, we could go back to another 30 ticks lower. So let's say 195 evens, so 19,500. And then if we can kind of fail the auction around there and keep going up, that would be something that I would want to look out for. Now, if we don't get that, if we just go into a straight up sustained auction, I would want to see single prints on DAX before we do anything. And then maybe, just maybe, I might short it. But again, I would probably only aim for about 35, 40 ticks. Today, I think we're a little bit far away looking at all of the numbers here. We're a little bit too far from the London value. So we jumped away pretty significantly. I also have the London average session range low at 19464. That's just underneath the Asia low. So that would be my second area where I would want to long. If we end up all the way up, I would probably just leave it. We already have a neutral day type. Now looking at it closely. Yeah, so C period actually did go up. So this wouldn't be a failed auction, but it would be the same idea. It would be neutral day fade from either 19500s or when we smash through the Asia low and then reverse. So that would be my plan for DAX today. God, this cold, man, is just so annoying. Ashoka Mulya says where to get order flow. So the first step, if you want to get level 2, which is real-time order flow, that will be on your billing area in Topstep X. Sorry guys, I have a cold. It's really annoying. It hit me like a ton of bricks yesterday, but I managed to get myself functional. However, my throat is just not playing ball today. Okay, so first step would be billing, and then you look for level 2 data. Level 2 data is the reason why I have all of these contract displays displayed next to the real-time price, right? So that's the real-time price, and then everything around it, that's level 2 data. That tells you where the market participants are positioned. And going back to that idea of round numbers, you can see that round number of 74 actually has 103 contracts sitting there waiting. So waiting like the ambush predators that they are, right? And that's another reason why round numbers are quite important. Again, I don't know whether we're going to get there, but I've given myself enough room, if we do get there, to add more, improve the price average, and lower the stop loss size. So that's the plan. But while I'm talking, this is actually a pretty good way to explain other things. So that would be step one, right? Looking at your DOM with level 2 data. Now, if you want to go further than that with order flow, I would stick away from it unless you already have consistency in looking at the levels elsewhere. So either volume profile, supply and demand, anything that can give you a pretty decent idea of where the swing extremes are. And then what you want to look out for is how the real-time order flow behaves around those levels, whether there are any bigger orders there. So that's first and foremost. And then the advanced way of doing things is reading tape. Now, I like Bookmap for that purpose. And I will be honest, guys, it probably took me about 7 years before I even started looking at anything tape related. And then for a long time, probably for another 2 years, it took me before I could actually come up with decent decisions, because I've seen so many events around those areas do something. And initially I was looking at time and sales, which was a cancerous thing in and of itself. But then now we have Bookmap, which is like a cartoon version of time and sales, and I much prefer it. So you can see the orders there as well, and you can see the bigger orders coming in. It gives a pretty good feel of what's happening. And just to give you a little glance, so here is, oops, what happened there? It won't, it's one of those things where for some reason it won't drag all the way over. But even, yeah, that's weird. But even here you can see there are some orders at 73.90 actually, just below it. But we know that there's some buyers at 74 evens too, and you can see two little heat maps there. So there they are. And this is the real-time orders stepping in. So we had some pretty aggressive selling here. They're trying to get to those 74 evens. That's what they do. So once we get there, you want to see whether it slows down. You want it slowing down. You don't want it getting assaulted like it's doing now. But at the same time, you're now seeing buyer exhaustion. However, sometimes that's only temporary. And then you see buyer exhaustion, and then they stop. It doesn't move any further, and then it starts to reverse. So we'll see what happens. But for now, they're really pushing lower. So let's wait and see. But I'm going to stick away from Bookmap here because we want to stay on Topstep. So maybe let's add time and sales just to see whether there's some orders, because it's the same information really. So let's put that in there. So we want to see, after this big flush down, we want to see no movement. And I will always use the full contract for that. I'm not going to be using tiny areas. I'm also going to filter this just to see where the slightly bigger orders are. And here they are. So I'm going to add another 2 here. And let's see if we can get a move up from here. So someone with 11 contracts stepped in just below the round number. People with 3 and 6 lots are also stepping in. And for now, like, they do take out the round numbers as well. So, and then, they kind of make a decision what to do. So now they have stopped for the time being. Again, they might flush down again, but for now they've stopped. So they smashed through the round number and they reversed. And now we want to see that move being sustained, because there's nothing unless they sustain the movement. If it's just a momentary takeout, it's just, it's just a little flush down, and then they're going to use that to run more shorts. And you will be able to see that either on time and sales, but for now there's a lot of buyers here, as you can see. So we'll see how strong they are and whether they have more volume, more juice in it to take this back up. If not, that's it. We have losing trade, and that will be it. We wait for the NYMEX session. So this will be the only trade that I do in London. because I have one hypo for London. I don't have a million of them for London because this is not really the main session. And if this one doesn't work out, I just leave it alone. So that's fine. I know GC is starting to move, but I'm only planning one trade for London today, so I'm not interested in GC today. So yeah, one trade for London, doesn't work out, walk away, come back, NYMEX, usually after the initial balance for me. And this is why I don't, I don't really, I'll be honest, I don't really like trading crude oil in London. My product for London is DAX. I don't really find that I have that much of an edge in London because London does nothing, and then we sort of come 2 hours into it and then it starts moving and there's no good orientation areas. So, okay, that's it. 206 down. London trading over for me. I have the biggest edge after the initial balance is over for NYMEX. That's 9 till 10 a.m. Eastern, which is 8 till 9 a.m. Central. London, my edge is on DAX. There's no doubt. But, I have some levels here that may work, they may not work, but as always, you look at the larger time frames. We're still in that demand. I'm not shorting here, so I still want to be long, but maybe not for this time of day. I have a concept about time of day as a level. Now, in London, it's a difficult one because it's an out-of-hour session. So anytime someone comes in with a slightly bigger order, they can just put a wrench in the works. And because other people who might have less of volume, less orders size, they might have their idea of what to do with it, but then anyone with a slightly large order can come in and just derail it. So I don't really think that crude oil has much of a rhyme or reason why it does things, and that's why I don't like it for London. Just like certain things that don't really trade through Asia, they can be a little bit erratic. Like, for example, if you look at euro dollar, on most days it's not going to do anything for Asia. But then you get somebody deciding that they're going to trade Asia in euro, and they just cause a whipsaw. And then that whipsaw kind of sometimes causes a herd mentality, so other people are like, oh, what was that? And then they start plowing in. But usually it's caused by some kind of China numbers or something that can mean they're going to use euro as a safe haven. So if China comes up with bad numbers, you're going to see euro dollar going up typically during Asia. So that's one behavior. But crude oil has been very nice to me in NYMEX. However, London, it's always fraught with difficulty because, you have, let me just see on the other chart, it is really annoying because sometimes it gets into a trend and you're like, okay, that's great. But then you have a neutral day. So it's like, it's a neutral day. So for example, right now, 30 minutes, we have smashed IB high and then it goes all the way down and then doesn't really hit any levels or anything, and it just starts pulling back up. So it's, at this time of day, it's a very thin market. If you look at the number of contracts, we have 7, 8, 3, 5, 10. That's not a lot of contracts. And that will always mean more erratic behavior. When you're trading NYMEX, you're going to get like 40 contracts, 60, 25. This is very low, very, very low. So that's why crude oil during London has been just a little bit odd. I don't like going into directional moves once we have a neutral day, okay? There goes my throat again. So neutral day types usually limit the downside, but I'm going to see whether we have some news, because if we do have some news, that can sometimes be a little bit helpful. I think we had some China numbers that just came out, actually. So let's see. How much do we believe in these Chinese numbers? That is the question. Says M2 money supply rises 6.8% year on year. Does that mean that that they're doing better now? All of a sudden? Because one of the reasons why crude oil rises, it could be worries about Chinese economy, right? So they comprise like 15% of crude oil demand. So anytime you have China numbers, it can do this. But I don't know. For me, this is all still like longs. Definitely longs. Yeah. So for me, there's no setup here. I wanted to be long further up. Didn't happen. So now I've got to wait for a better time of day for my hypothesis to work out. When I say better time of day, like I said, I have a concept of time of day as a level. Why? Because there are certain things that happened for NYMEX after the initial balance that can cause very, very nice moves and reversals and a whole bunch of stuff. And that's the European option expiry, right? So you have Forex options that expire at 10 a.m. Eastern. And then after that, a whole bunch of options are exercised. Now, why is that important for crude oil? It's because it's Forex linked. It has a very strong correlation with the Canadian dollar because Canada is one of the largest exporters of crude oil. So naturally, around about that time is when I will be looking for my main kind of star setups. Anything during London, to me, it's always like fraught with difficulty, to be honest. Casey Trading says, hi Dee, I was watching the NQ daily and it looks like there isn't much resistance between 20,400 and 20,400 and 20,800. On NQ, looking at the options, I actually do see a call resistance and a gamma wall around 205.20. So I would not necessarily keep anything past that on NQ. And I'm using SPX options converted into NQ to see that. So yeah. But yeah, for now, I don't really have a setup in crude oil. Let's see. Thomas Swinton, yes, there is a scaling plan on the XFAs. You can, if you're on Topstep X, you can trade up to 20 micros, but only 2 minis. However, if you're on NinjaTrader and other platforms, that is still only 2 contracts on both micros and minis. Yeah. The different trader, are you going to be on TSTV today? No, I'm for the time being not going to be on fast markets. Thomas also says it was 5, they just changed what the so the scaling plan works depending on how much money and buffer you have in your account, right? If you don't have more than, now I don't know, it's like, correct me if I'm wrong, but before it used to be you have to have more than 1,500 in order to open up higher risk limits. So yeah. CL is holding put support. It is holding put support. That is another reason why I was looking at and potential longs around 74s. Didn't really want it to go down to 73 to 60s. Didn't really want that. You know what? I can try another long if we get price action here, but I'm going to try it on very small size. And I'm not going to be adding to my full size because I want to wait and have enough ammo for later on. Let's see if we can maybe get a range happening around here and then maybe get closer to the low of the range. Maybe. I don't like that they've not moved it up over the 74s. Again, I use the 74, the round numbers as my orientation point. So if we have put support, I can also see a high volume level there too. So one of the dangers here is that if we go below whatever this is, 73, 74, that could flip gamma exposure. and then you have a springboard to go down. So I would actually need a little bit more here. Now, you know what? I'm going to leave it. It's Monday, and again, I don't want to dig a massive hole here before I get to my real edge, right? So I'm just going to leave it at just 200. It's a small loss. But yeah, we can talk through it, but I'm not going to be running my XFAs into the ground and doing trades outside of my edge, especially because I don't have DAX, you know. Yes, put support could be supportive, but I don't like seeing the HVL, like the high volume levels there too, because they can act very quickly to just keep pushing things in another direction. Hey, Francis Green is here. If you don't know, his YouTube channel is 10 Trading. So Francis Green is in the house. He was my guest here a couple of weeks back. Maybe we can drag him over another day. Money Machine says, Deeyana, where are you from? I live in London, but I am Serbian originally. Well, Serbian, Italian, and Greek. But I was born and raised in Belgrade. So, yeah. However, I've lived in London since the 2000s. So, very long time. I've probably lived in London now longer than I have in my own country. Yeah. Money Machine says, London Open, only trade DAX, darling. Yes, thank you. We don't have DAX on Topstep, but yes, that's what I do on my private accounts. I definitely don't go full port on on London for the levels that may work, may not work, and generally don't have that much of an edge. Yeah. What's your favorite setup for CL? So my favorite setup is when it fails the auction after into the euro close. So that would be my favorite setup. Ideally, I would like it to be somewhere around another level, either one of the gamma walls or distribution curves. But otherwise, after 10 a.m. Eastern and into euro close, I look for a fade, and that is my main setup for crude oil. Thomas Winter said, London looks bad now, as in dangerous. I'm British, but in the UK. Yeah, I mean, there's a lot of crime in London, which is why I'm moving from London and going to West Sussex. SR Flip says, I've already upvoted for DAX. Well, if everybody in here upvotes DAX on that thing that I posted, then we'll have DAX. But, you know, until that happens, like I said, I tried everything and they just like keep pushing it. So it's not working. Yeah. And until then, I have to mess around with crude oil because, you know, we got to find some trades, right? And I do have a live account, but again, I only do my euro fades for my first trade. If that goes well, I might look at ES at the end of the day for power hour. Right, let's do some plugs after this. Rather than looking for trades that have no edge, let's do some plugs. We have Brett Steenbarger coming back. He is actually making his return tomorrow at 11 a.m. Central for a special trading mindset Ask Me Anything. So you can ask him anything. He's awesome. Like he's one of the guys that I really look up to for my mindset. Now, he's going to be joined by Anne-Marie Band and Hogue. So, you know, the questions are going to be great. And obviously, you don't want to miss that. Doesn't matter how good your levels are. So, you know, or how much of an edge you have. Like, let's say I lost this trade. I know that I don't have that much of an edge on crude oil for London, but I know that I have a great edge at the time of day that I call post NY cut, because it's NY cut is the option expiries. It's called the NY cut. So after that, I have an edge, right? So if I were now to keep trading and I'm like, oh, crude oil didn't work, let's go to gold. Oh, I maybe have a level there that's also a little bit dodgy. Let's do that. Oh, that one doesn't work. Oh, let's go to platinum. Let's go to copper. That means that you are doing a whole bunch of stupid trades outside of the time of day when you're actually supposed to be trading, right? So if you look at your performance stats, we have performance stats, but probably not on this platform. What time of day is best for you? Go into Tradezilla, go into Edgewonk, take a look at your performance by hour on a particular product. What time of day, traditionally, historically, did you do best at? Okay? What's that time of day for you? For me, it's by far, it's between 10 a.m. Central and New York, 10 a.m. Eastern and New York lunchtime, which is like midday, right? By far, like it outperforms anything that I've done, apart from DAX. Now, DAX for London is my second best performing product, and they're kind of neck to neck. Post NY cotton crude oil, DAX on London. But when it comes to gold and crude oil in London, I probably have about a 40% accuracy there. So, but because we're doing these sessions and I don't have anything else, I have to find a trade. You guys want to see me do trades. So, Thomas says live in Australia now. Right. Where in Australia? My best man actually is in Queensland at the moment because his brother lives there. Desmond Menza says, Dee, how about shorting NQ now? NQ I would probably leave for power hours. So I do trade ES and NQ, but I don't trade them for London. Primarily because, like CL, I think they are not that reliable with the things that I look at, the way I trade. I think that some of the initial balances are pretty small. And I think that even if we reach some of the gamma walls, they will get retested for the main session, sometimes from the other side. So London sort of ignores whatever is happening, and then they kind of use it as sort of a back test of a level. So let's say we go up through a call resistance, then we come back down. That can actually be a pretty decent level. So for me, again, not having any of that on NQ, I don't really see a good setup here. Maybe we can ask Francis. Francis, you trade NQ for London. What do you reckon? And I see that it's gone up into a sustained auction. So that would be fading a directional move away from any levels. The first level that I have is that 20,520. So nowhere near that. I mean, the IB size is also very pitiful. I mean, come on. We're looking at, look at it. So the difference, just looking at session ranges and the averages, they can be a very good indicator of how a session is doing. So we have New York session on NQ that has an average of 769 ticks inside it. And we have London that has 235 ticks. I would say that's like pretty horrible for NQ. And yet the size of the candles are about 20 points, so 100 tick wide. So effectively, in one candle, you already go over half of the range. That's a bad sign. That's an out of hours market. So I wouldn't be doing anything with NQ here. But again, if you trade NQ for London and you're doing well, you do you. You backtested your approach supposedly, right? And if you haven't, that would be your homework. Find your edge, right? And if it's not in London, then just don't trade it. Don't trade it. Observe it and write down stuff, but don't trade it. There you go. 10 trading. So Francis says the same. NQ is just trending, but we do have Friday's high just above. So we'd only be looking to short from 500 to 520 zone. Look at that. So he's got a level that is a call resistance level. So why would we do anything ahead of that? And Francis says also it's no news Mondays. No news Mondays, yeah. Part holiday. Lovely. All right, let's see. The different trader says, I never ask questions, let me break my rule. If technical analysis is perfect, if you don't go in, or when you're in replay your tool, but they fail when you actually go in. So there is a mental issue. How would you solve it? The way I solve that is by going back to what my historical edge is, both the time of day and the levels that I'm using, right? So let's say I had a level in crude oil that was 74s. I do have some other levels, but 74s are the level that I'm looking at right now. That's in play. However, because the first attempt failed, I'm not now going to keep doing the same thing out of hours. I'm going to go back to my edge. So that means after this stream, I'm going to go and first rest up because I'm sick. But second of all, I'm not going to do more trades until the time of day when I have the highest edge. And then if we're still around the same level, which sometimes does happen, well, it actually happens more often than not, I will look to position myself in the high pose that I have around that level, which for now is longs from ballpark 74 minus plus 30 to 50 ticks, because it's a zone, right? So I'm still looking at the same, but the time of day is not happening. So if I were to allow my loss to affect me and to start doing stupid things and to go, oh, I need to recover this before the main session, that means that your mental game is off. And that means that you're not working within your edge. You're just letting your emotions play into it. There will be losses, guys. There will be losses. I lose a lot. I'm wrong a lot, right? But I'm also right for a lot more ticks that I am wrong. So if I lose 200 on one trade, I actually expect to get between 450 and 700 on my next trade. Sometimes even more. It depends on the opportunity, the type of a move. You know, if it's a trending move and I got in maybe slightly earlier anticipating it, I will hold that until the cows come home, right? Or until one of my algorithmic ranges are hit, or if we hit the core resistance, for example, for longs. Otherwise, it's one of those things. Don't let look at this as an expense. This is just an expense. So if you're having trouble of matching your edge, and then you're doing a replay, and everything works out, but then you come to do your job in the live markets, and you're not able to go in. That means you're letting the pressure get to you. So what I would say to you, take away your own control to have to click the market order. Use a buy stop, sell stop, buy limit, sell limit. They will take away that control from you. Because if you can't push a button, to me, that's a bigger problem than being an overtrader. Actually, Francis, 10 Trading, I just watched your video that you posted. I think it was a couple of days ago. And he talks about being in the arena. Francis was a professional footballer. And he said, you can have people who are great in training. They're amazing in training. And equivalent to that in trading would be the combines. You would be smashing your combines. But then people put you in the live markets and you break down. You can't click buttons, or you overtrade. You can't control your emotions. That means you're not working out your mental issues in the live arena, which is what we should be doing. That's where you need to perform. If you can't do that, you're not a trader yet. You're somebody who's on the path of learning, but you're not able to control your emotions when the pressure is on. Combines are a great way to test your strategy. They're a great way to work out what you're doing right, what you're doing wrong. But then you get to an XFA level, you get to a live funded level, and suddenly the game changes, right? Suddenly everything is a lot more difficult, and you seem to make really bad decisions. Now, that never fully goes away. It's not like one day you're going to wake up and you're never going to have the feeling of pressure or frustration or fear or something, but you can recognize it as your trigger. And this is where somebody like Brett Steenbarger can help you, but there's also Jared Tandler. He's on Topstep as well, right? So Jared has this concept of A game, B game, C game. That's actually really good because you can identify your own triggers for when your A game starts to slip. and then recognize that and get ahead of it. But it's always done with the help of journaling. It's always going to be done with looking at your previous performance in, let's say, a combine when the pressure was a little bit on, but you could always reset. So you had that sort of fallback, backup plan sort of thing. Oh, it doesn't matter if I mess this up, I can just reset. Well, you get to an XFA, you can't reset. You have to start again. If you mess that up, you start again. Now, for some people, it's not a problem. We've got to a point where you can pass combines in, a couple of days, and then you have some more XFAs. But I don't do anything super risky. I still stick to the time. Like if I'm trying to pass a combine in 2 days, not saying that you should be doing that, but at this point, combines do absolutely nothing for me, right? So there's no point in me spending extended amounts. Like unless I've already traded, I've locked up my account, I have some profits, or I want to stop the losses for the day, then you might see me trade a combine. But outside of that, I will always be either in an XFA or in a live account. Because for me, I know where my edge lies. I know the time of day. I know my setups. I know everything. What use is it for me to keep spending time in a combine? But most people won't be there yet. So it's very useful if you're still tweaking, or if you're tweaking something. Like, for example, I started trading Nikkei not too long ago. I don't know that market very well. Of course, I'm going to trade it more in the combines, because if I have a hypothesis that I'm not sure, will it work out, I want proof of concept first. And then if you get an XFA out of it, you're like, okay, this worked. Let's try that same thing again. Don't vary your parameters. Trade with less size. Try to add, a little bit more. Like I did, one of the XFAs that I had was 150K. On the very first day, I managed to grab an FOMC Nikkei long, so post FOMC long in Nikkei, and it went up for $7,000. So it's like, yeah, great. But that's like proof of concept on Nikkei from a method that I've been using for the last 12 years. It's nothing new. It's just a new product. So it's not that much of a tweak. However, if you're not there yet, if you're not quite sure of the edge, if you haven't seen that same setup play out in many, many different market states and many, many different day types, then that's probably not the best thing to just shoot for passing a combine in 2 days and go straight into an XFA. So use these tools that Topstep gives us to educate, to develop yourself, to grow more, right? .007, you're going to be booted out soon if you continue with that. Mario X says, concerning win rate and everything, did you create a playbook? Yeah, I have many playbooks, actually. I have many playbook. Concerning it, so do you stick to the ones with highest win rate? No, I actually stick to the ones that offer the highest profit margin, regardless of, like, if the win rate of that setup is still about ballpark 40%, but I know that it's going to go 3 to 5 R multiples, I will take that. So it's not about the levels that work out the most frequently. It's the levels that will bring me the highest profit margin, if that makes sense. Because I shoot for higher R. I don't shoot for super high accuracy. If I have 50% accuracy, that's smashing for me, because I usually have between 2 and 4 R multiples on most of my setups that do work out. So I see Thomas Swinton is in Brisbane. Nice. So my husband's best friend lives in Brisbane. He's an Aussie. Yeah, so 10 trading. So Francis, if you don't know, like I said, 10 trading, that's Francis Green. So go follow him on YouTube. Subscribe to his channel. He has awesome videos that kind of hit right into the heart of the issues. Mark Saunders says, Deeyana, down under, we are stuck mostly in the ETH. I have my Lippy next to my work computer during the day. Then jump on for the last few hours, but strategy and volume is an issue for me. Any advice? I'm not sure hold on. What's lippy? I don't get the context there. Maybe it's just me being foreign. Shane A says, I live on the Gold Coast, going to Brisbane for work. Nice. Who's YouTube? Francis Green. He's on Topstep. You will see him on Power Hour usually. So Francis Green is a former UK football player, professional soccer player. And he's amazing. So I've had him on for the London session as well as a guest a few weeks back. But yeah, it's such a good channel. Like he just goes in raw, no animations, no nothing. He just switches on the camera and just like, this is what you're doing wrong. And I love it. Absolutely love it. Oh, laptop. Yeah, sorry, lappy. Yeah, not lippy. I see. Laptop. So strategy and volume. We'll start with strategy, right? That's always the first part. If you have a flawed strategy, that's never going to work. So you need to first go into observation mode and find some levels that you're interested in. Like, let's say I use the combination of initial balance edges, I use swing extremes, and I use algorithmic ranges. So average session range, average daily range, and then I match all of that up with some options levels. But let's keep it simple for now, because obviously I've been doing this for a very long time, and the method has evolved somewhat to find like some more accurate zones for my time of day. But if you don't have the good strategy, first levels, yeah? Step one, levels. Find a strategy that does work to some degree of accuracy. Doesn't have to be super high, and you also have to decide on your style. Are you more attracted to the higher R multiples like me? So you want lower frequency of trades, higher R at the expense of hit rates. So my hit rate would float between 43 and 53% when you look at all the products that I do. And somebody asked whether I trade copper. Yes, occasionally. I trade precious metals in energy markets. So I would trade RBOB, CL, platinum, copper, gold, right? Silver, it's a bit too expensive for these markets, well, these combines and accounts. So I don't do silver, because I think silver can move a lot, but it's also very expensive. So, until you have like, I don't know, I'm a little bit risk averse these days. So unless I have, 250K in my account, I won't trade products that are very expensive. That's just me. So yeah, so levels first, and then look at the times of day when those levels are most reactive. So that's step two. That's all strategy, right? Then look at what sort of stop size would have been needed to run that particular trade from that level successfully. And then see how many times that level did the same thing. And then the third thing is to look at how far the price moved away from the level. So if it only moves 10 pips, it's 10 pips, right? If it moves 70 pips, why did I say pips? Ticks. Pips, ticks, same thing. So if it moves 70 ticks, then it moves 70 ticks. But can you then get a higher risk reward by lowering the stop loss size? So let's say if you were to use a 30 tick stop, would that level and the trigger that got you into a trade, would it survive the 30 tick stop in order to get a 70 tick move out of it? Do you maybe gravitate more towards a high accuracy and lower win rate strategy? So aiming for 1-to-1, but aiming for 70 and 80% accuracy. So those might be some very different levels. But whatever you do, I always go for quality over quantity. So I will never go, oh yeah, you need to do 20 trades per day. Because some of the best scalpers that I've seen, unless they're market makers, which is an entirely different ball game, they have size, they have volume they need to fill. But for those of us who are in this sort of retail side of things, scalpers that I've worked with usually do 3 to 5 trades per day. But they only take a chunk of the move. So they take 10 to 20 ticks and they're out. If you're looking at a style that's closer to mine, where I will do about 1 to 3 trades per day, and I aim for the higher R, that's a different matter altogether, right? So that is more of a, I call them the semi-swing trades because it's still intraday, but you're aiming for a larger risk reward. Then you have to accept that your accuracy is not going to be 70-80%. Like there are times when maybe for a week I might have that, but then very soon the large sample size takes over and my sort of mean average accuracy goes back down. And it floats between 43 up to 53%. Immediately from a system design point of view, that means you need to have at least 2R or 1.5R in order for the math to work. So all of that is just strategy. Once you have the strategy down, then you can move on to psychology and everything else that might be plaguing you at that point. But yeah, track it, observe, track, try to get involved, and then just rinse and repeat until you get better. Okay? Everything starts from observation, backtesting, trying it out in demo. That's where the demo is very useful. That's where combines are useful because they add a little bit of pressure, but you can always reset. However, you have some risk parameters to follow. So suddenly it's like, rah. All right. Gold is not more expensive than silver. Real silver, like full silver contract, is $25. It used to be $50. We now have micro silver, which is $5, but it still moves a lot. Like if you want to use, let's say here I aim to use from 175 up to 250 per trade. That's the risk on these 50Ks. Silver is just going to eat that up in like 3 seconds, even on a micro. Micro silver is still $5, but it moves a lot. So it's just not, to me, it's way too risky to trade on these. Francis is saying I'm making him blush. Oh, come on. All right. D, help me for sure with the demands and supports in Asia retrace. Yeah, that does happen a lot. Maybe I should have looked at that today, but hey. Do you stop based on the win of a trade or a dollar amount? Never a dollar amount. Never a dollar amount. I have the dollar amount here for your sake. When I'm trading by myself, I have no dollar amounts anywhere. I literally have realized P&L, open P&L. I have it all blacked out because I just want to see ticks. I aim for ticks over dollars. So for example, if I'm aiming for 70 ticks and I know what my default size is, I will always see that the trade is going to look the same. It doesn't matter if I'm using 5 micros or 50 lots. My throat is going, guys. Okay, last question for the day and then I'm going to go. Ultimate Gamer says, why did a Chinese report impact CL futures that fell? Any words? Yes. Chinese crude oil demand. So how much oil they use compared to the world demand, it comprises 15% of the entire world's crude oil demand. That's a lot. So naturally, when the Chinese economy is not doing well, they're probably not gonna be using much oil. The travel is going to be lower. Disposable income is not going to be that great. So all of the things is going to be against more crude oil. So lack of crude oil demand means higher prices. Okay? If Chinese, and vice versa, right? So if there's more demand for crude oil, that means it's going to effectively go down because the supplies are plentiful, right? So it's like there's loads of people traveling and, we're kind of using up crude oil and whatever. So that's why Chinese economy is quite important for crude oil. And that's why today, I probably should have, I didn't really see this on a calendar though. So if I had seen it, I mean, it was there, to be fair, but somehow I will pitch this to me being ill and not really looking at all the details. Another reason why you shouldn't be trading while you're ill because you don't take in all the things that you need to take in. The information is a little bit sketchy, but that's why. So crude oil and Chinese economy, they have a big correlation because of that exquisitely high representation of demand in China. All right, guys, I'm going to go and be croaky somewhere else. I hope this doesn't get any worse, because then I'm going to have to ask somebody to replace me for a day or so. But yeah, I'm going to try and do my best to get better for tomorrow. However, this just hit me yesterday, so I don't know what's going to happen. As long as I have a voice of any sort, I will be here for you guys every morning. And yeah, so let's try and push that Eurex up higher. Now, if you want to submit questions for Brett Steenbarger for tomorrow, I'm going to drop a link in the chat right now. So there it is. And he will answer them live on air. Remember, that is tomorrow at 11 a.m. Central. That's it. Make sure to like and subscribe to the TopstepTV channel. Check out my own channel as well. I tend to do sort of weekly outlooks. It's not like every week, but I think that people find it pretty useful. The links are below this video. And until tomorrow, take care. Make sure you're not over trading today. It is Monday, so if you've had, if you try one trade, try another trade, it's a loss, just lock it up and come back tomorrow. The markets will be here long after all of us are gone. Thanks for hanging with me. As always, I am Deeyana Angelo, and this has been TopstepTV London Session.